Hello and welcome back to another video. My name is Justin and today we're going to talk about the gap and go on the S&P 500. I'm talking about this move right here inside the yellow box. We can note that the last time we saw this pattern, meaning the S&P coming down in a dramatic way, it crash landed here at about 384, which was our bear market territory. It gapped up and it left the gap and went higher. It ultimately led to a fail, but the important thing here is that we are noticing the similar thing setting up here. We note that we dropped dramatically off of the 50 EMA. We come all the way back down and crash land here at about 380.5. And after that happens, we put in a Nike swoosh, we gapped up, filled most of the gap, and now, as of right now, it appears like we want to go higher. What's really important about this move versus the last one is just that, as we look here, we were really struggling with this VWAP the last time. And as of right now, every time we've hit the VWAP, we actually bounced off of it and closed above. Over here, we did not. We closed below, closed below, closed below. And then ultimately losing this VWAP here is what led to the next leg down. The reason why this is so important today is because we know that on Wednesday, we're going to have the FOMC meeting minutes. This is going to tell us what the Fed decided at their last meeting and what their actual commentary was. I don't know we're really going to get all that many surprises because they've all been talking, they've been chirping, they've told us exactly what they thought. The reason why I'm pointing out whether we're actually going to gap and go or if it's going to hold is because we're getting some positive signs, but there's a few things that are missing still. So what is missing? First of all, volume. We're not really seeing any enthusiasm on this rally. I would call it a reluctant rally. And I'm saying that because there is no volume. We got a huge push of volume into the close, and the open, quite soft. There was very little volume at the open, and very little volume all day. We can note that here by looking at the volume buzz, and the volume buzz tells us how many orders happen, not the total volume, but orders. And we can note that the S&P is currently seeing negative 40% volume buzz, which is right where a lot of these other ETFs are. Negative 20, negative 30, and only two ETFs actually have positive volume buzz, XLF and ARK. So that is the first warning sign, meaning that we don't really have volume to confirm the price action. And this is very important because as we look here to our weekly chart, what we have to remember is that we were looking for this falling wedge to break bullish. And if we're going to see a break higher, we cannot just rally into Wednesday. We have to rally beyond that. So as of right now, as we're looking here at this pattern on a 1-week chart, what I'm noticing is that we are butting up right against the downtrend here. This is very, very important because it is where we would expect to find resistance. And as we now zoom in to the 1-day chart, what I'm noticing is that we are actually setting up a divergence here, meaning if we ignore the move down yesterday, what do we have? Well, we have a basing pattern, we have a higher high, we have a higher low today versus yesterday, and we have another higher high. And we're actually closing above the price from Friday as well. There was a really funky bar right at the open on Friday, which led to that 397, but regardless of what happened, we actually claimed it. So the second reason why this is very important is because as we look here to my indicator as to whether or not we are seeing risk on or risk off, right here for SPY, BTC, ETH, we're noticing that some are above and some are below. So what is above and what is below? Well, as of right now, the S&P is closing out here at, S&P is closing at 397. QQQ closing out at 293. And we actually saw a pretty notable leg down on crypto into the close. BTC closing out at 29,200 and ETH closing out here at 19.9. So what does that mean? Well, S&P is below 400. QQQ is below 300. On a closing basis, as of right now, BTC is below 30K and ETH is also below 2K. So what this means is that we are seeing some positive signs, but like I said, I'm calling this a reluctant rally where people are not really eager to buy. I think they're more looking at areas where they could be selling to reload and be more strategic. All right, with that said, what I now want to look at is going to be the fear and greed index. So we're already here in extreme fear. The market is due for a bounce, as we noted on the weekend. And if we can't really catch it now, I'm not sure when we will. Next thing I want to look at here is going to be the options chain. So this tells us the motivation for option buyers in terms of where they think we're going to go. And when I'm looking here, this is, again, I'm ignoring the chain for today and for Wednesday. I care more about the Friday one because there's open interest. And this tells us who was actually bullish for the entire week, meaning after that FOMC meeting minutes we're going to be getting on Wednesday afternoon. When I look here at the 27th of May chain, which is going to be for this Friday, what I'm noticing is that there's a lot of activity here at 400 down to 390. And we can know there's a lot of volume here at 390 and open interest. On the flip side, in terms of calls, we notice 395 to 400. And the most volume on the day is coming in at 400, and the premium's about $3, which means that for them to get their money back, we have to be at 403 by Friday. That's a pretty good start, and that's about about 7 points higher than where we are right now. If we look for follow through to June, and again, remembering that if we are going to break that falling wedge and lead to a new bull market, people should be excited to buy calls. I'm not really seeing it. In terms of volume, I'm only noticing that there's actually not a single strike which has more than 10,000 volume on the call side. And over here on the put side, we do have a lot of volume. So we got, open interest. Volume came in at here at 390, which is going to be continuation from the Friday chain. And we got big open interest at those same strikes of 400 and 390. So I'm lacking the conviction here from the bulls to want to buy those leaps. Last thing I want to look at now is just going to be the leaders, meaning are we still seeing the same leadership that we were before? The first thing I'm noticing is that there is divergence happening between SPY and QQQ. So what I want to point out here is just that the important barrier for me on SPY, as we noted here, was 400 SPY and 300 QQQ. However, what I want you to do here is to look at the prices we actually closed at, because I still believe we are coordinated. So if we were coordinated on the move down for the last 7 weeks, the question is, are we still coordinated on the move up? And when we look here, we note that S&P is closing out at 397 and QQQ is closing out at 293.5. So the reason why this matters is because that natural resistance level for me on SPY is going to be about 400. But before we can get to this 300 mark here on QQQ, there is a very important area that I pointed out, I believe, on the weekend. If not, I know I did last week. That is going to be the 2021 low for QQQ. So before QQQ can get to 300, what it has to do is actually get through 297.4, which means we're roughly 4 points off getting to reclaim last year's low. And when we look at the S&P, it's already above that area, which means it's not going to be resistance. So the natural area for SPY is going to be about 3 points higher at about 400. So in my opinion, I am thinking that SPY and QQQ are still synced up. However, because we're not seeing that that options continuation through to next month, it means that maybe we're just resetting the chain before we get that move lower. And I think Wednesday could be a catalyst for us to do that. Second thing I want to look at here is just crypto, because I did not really see anything for us to have this dramatic move lower on the 1 hour. However, what I've been noticing is that crypto usually leads in terms of down and up. So if we note that crypto goes down, stocks usually follow. I don't know if this is just them trying to get it back below the round numbers of 30K and 2K, but this is definitely a warning here because it's a pretty dramatic move lower and there's volume. But when we zoom out to BTC, on the weekly chart here, it's actually not all that bad. We can note that we have 2 weeks of back-to-back inside bars, which means that we are within the range of the previous bar. And 2 weeks ago, when we formed this massive volume dump, this looks like capitulation here. We got a massive lower wick. And then since then, what we did is we sucked back up into the demand pocket, which is going to be the same zone we had going all the way back to December of 2020. It's the yellow box. So inside of here, every time we come back down, they buy, they buy, they buy. So if we cannot hold this buy area, what will it become? It will become resistance. It's going to become resistance. So where this inside bar breaks is going to be very important in terms of risk appetite. And what we can note here is that last week's low is 28,600. Our low so far here, 29,000. So we don't really have that much wiggle room before we are going to fall back down. And if they were excited to buy, but now they're not going to rebuy, it either means that they're no longer excited to purchase here, or they've used up all their bullets. Either one of those is not really a good sign for the bulls. So crypto here is flashing a little bit of a warning. We already talked about QQQ, so I'm going to push forward here to talking about Apple and Tesla, because I'm noticing some divergence here. In terms of the trillion-dollar companies, Apple crushed it today. It's up 4%. And post-OPEX, we would expect up into Wednesday, down into Friday. Tesla is not having that same reaction here. The second biggest gainer is Microsoft. And what's very interesting about Microsoft is that it's actually quite heavily weighted inside of the Dow. So when we look down to here, the divergence of SPY versus QQQ today can be largely attributed to the Dow. The Dow is up 2%. And again, Microsoft is now emerging as a leader. So our question is Apple and Tesla still the leaders we should be looking to, or do we want to revert back to the biggest blocks, meaning who are the largest companies in terms of market cap for the S&P? Because if Apple and Microsoft go higher, those are the biggest blocks. They have the biggest weighting on the S&P. So Tesla is nice for us to have higher. It was a leader. As of today, one day, I'm not seeing it really show that leadership. It should have snapped back a lot harder. It had a dramatic move lower on Friday. So when we look here to those charts, first of all, we're going to look at Apple because clearly it's still a leader. And I'm saying that because when I look here at the chart, I'm noticing that going back to 2 weeks ago, again, we can note that we got back above the high, and we actually have a really tight inside bar here versus last week. And we are bouncing off the 2020 high, September 2020. Right now, we are re-attempting to get back above our January high, and that means that Apple has pretty much gone almost nowhere since the beginning of the year. That's pretty good, all things considered. And sorry, that's back to 2021. So to the beginning of 2021, not 2022. My apologies. So looking at that 2021 January resistance. And what's notable about here is that we are already below the 50 MA, but the snapback is actually quite nice. Volume is roughly on par. It's only poking over that 50 MA a little bit here. So not really seeing any major warning signs. And as the largest company in America, Aramco is now bigger than Apple. This is what we want to see. 4% on Apple is a huge day. It's almost worth $3 trillion. So the warning sign we're noticing here when we look at Tesla is that there's two things I want to point out. So when we look back to the, let me just have a quick look here. Maybe I'm messing myself up. So I'm looking here to the September of 2020 high. That is way off. So when we look here to the September 2020 high of Tesla, that actually goes all the way back here to about 500. So what that means is that Tesla is still way above 500. However, it is losing steam in the short term. And I'm saying that because we have an inside bar versus last week, but our high of today is 379.96. That is 4 cents below our low from 2 weeks ago, the area that Apple reclaimed with no problem. That low was 380.00. So that is a rejection. It's not a huge rejection. We're only below by about 5 points. But after this dramatic move down, what we would normally expect to see from Tesla is, again, over history, every time it drops down by 20 to 30%, getting closer to that 30%, it's always been a strong buy. And when we look here, from its relative high in April of 2022, it went down by nearly 30%. We got our dead cat bounce here of roughly 16%, so recouped just over half of the move. But now, from that recent high on the dead cat bounce to where we are now down by 33%. So I'm noticing a couple of warnings here, and notably with Tesla, just that, again, it's still holding a lot of gains. When we zoom out here, oh my goodness, from 100 to 1200, that is a huge move, but it looks like it's losing momentum. And if it's rejecting here, it can only make it to 680. How is it going to get back up to 900 or 1000? I don't know. So with that said, I'm not 100% sure where we're going to go tomorrow. I laid everything out on the weekend deep dive. And if you want to know my deeper thoughts, I encourage you to watch the video, which will queue up here in a moment. And thank you very much for your support on the weekend video. I really enjoyed doing it, and it was really nice to see the positive feedback. Thank you again. I look forward to seeing you tomorrow.